Chappie, have you looked at Silex? Look how strong it is.
Oh, I know. I saw that. I didn't even get a chance to buy it. Sheesh. Yeah, I saw that. I didn't even get a chance to buy it. It was already like. But once again, it's the second day in a row of retesting, 330, and it just immediately bought it right back up. That is some serious strength there. Seems
Yeah,
seems.
definitely. Someone likes it. It must be some institution or a few institutions or something. Someone just keeps buying it.
I mean, it has really small institutional ownership. So,
Hmm.
I mean, there is some private owners, but for the time being, I mean, I don't know. Maybe Kamiko is just sneaking in with a bid or something. I don't know. Jesus.
But we would see that. Has Cameco? Oh no, so Cameco own what 49%, and that's disclosed, isn't it? Well,
Yeah, well,
obviously that would be
that's in the
disclosed.
that's in the American GLE Incorporation. So
So there would, if they'd increase their position size, they would have to notify the market. We would get that change of substantial, what we call a change of substantial on the
well,
ASX.
I don't think they actually own any. They're not listed as as a large shareholder, so I don't think they own Silex. I think that would be a private deal between a
Ah,
company that whether it would have to be disclosed. I'm sure it would have to be disclosed on the ASX, just simply because it's quite material. The Silex, of course,
yeah,
but at the same time, very much so that yes, Silex has I think it's pretty solid. The market seems to like that at 350. Um,
yeah, definitely.
so
Well, Canaccord like it. I think Canaccord have it as a buy with. I think their main three stocks or four stocks is Silex, Bannerman,
mm,
BOE, and Paladin. Those four.
yeah, I mean, today was definitely, I think, since everyone has been, I imagine, very busy looking at the one of the more crazy days in the market. These happen every now and then. I guess once Alex gets here, we'll see. The whole point of this space is just to kind of keep it sort of short and sweet. We just want to focus on the topic of, what's happening with uranium stocks. What is the, without getting too bearish, too bullish, just trying to keep an even head here, seeing where things are potentially going. I definitely would say that I have been singularly impressed with the resilience of Cameco. Um,
Cool.
and I could say the same thing. We're not seeing large sell downs in Boss. We're not seeing them in Paladin. We are definitely beginning to see some retesting of, I think, Liberty in our little chat earlier pointed it out as the I guess the Japanese highs or something, or the Japanese news. I just consider that to be where the stock was on August 29th. So, um, yeah, just by the way, everyone, just remember the space is recorded. It's also on the Proven Reserves YouTube channel if you prefer to watch it there, as opposed to, trying to make a podcast out of the Twitter app. So, just to let everybody know. Um, Definitely, the sector leaders have, without a doubt, been global on this side of the Pacific Ocean, have definitely been global and global atomic and Cameco. We're definitely seeing, that we have a lot of there's a lot of room. The same thing could be applied to Boss. Same thing can be applied to Paladin. Not so much Lotus. 92E, it's unfortunately kind of selling down. We'll see where that ends up today. Silex is also kind of selling down from the point of where it was. I mean, you got to remember it did run up to $4, so that's kind of a little of an outlier. Um, Peninsula also. So we are seeing strength in the companies that I have been telling people where you want to be for a very long time, and that is producers. All of these companies are near term producers. Okay, Global has a plant. They're going to be in production if they can keep their schedule in 2025. Same thing goes for Bannerman, not for Bannerman, excuse me, for Boss and Paladin. These are also near-term producers. Now we have seen a little bit of fragility in Kazatomprom, but they also were not necessarily as buoyed by the news. They're right at what I'd call the retest point as well. But we have room to potentially sell down and stay within this bull channel, as they would say, with not, I don't think without potentially causing a huge sell-off in Boss, in Paladin, Silex as well. I don't know. I'd be careful with Silex. You never know what that thing's gonna do. That thing it's bouncing around between 233 or 230 and 350. So we'll see where that one goes. But definitely Boss, definitely Paladin. We have a little bit of bizarre day. ERA is in the green, as I like to call it. I think there's somebody that just like they just have a bid or something, and they just don't pay attention, and then the bid gets filled, and then that's how ERA goes up. I'm convinced that's the only way that it makes sense. There's just someone who's got they've died, and at their they had their brokerage account, they had just a little script programmed in so that it would just automatically put a bid in on ERA, and it gets filled on just the most weirdest days, and that's how that is in the green. I have no other explanation for how energy resources of Australia somehow stays in the green on these broad market sell-off days. So, Patrick, what are your thoughts here? Obviously, we have some, we haven't, again, we haven't reached the point of panic, I would say. In uranium, particularly, you have some room here before you're retesting August lows, but we're getting close.
My thoughts would be continue to do what's working. You know me, so my strategy is pretty straightforward. It's buy in those massive corrections, in those massive dips. It's not buying after stocks have rallied, some as much as 100%. These uranium stocks, 92E was up 100%. That's obviously not a buy at that point. And people who have bought 100% up, they're probably kicking themselves a little bit now. But yeah, my strategy remains buy on those significant pullbacks if you're a long-term uranium bull, and then look to hold it. And when you do get those huge rips, 50 to 100% move in a week or two, you have to be trimming at least a little bit. I'm not saying sell it all, but certainly trimming. I like to trim about 10 to 20% of my position on those really big rips, because then you've got a bit of cash on the sidelines that you can then redeploy if there is a correction. If there is a significant correction, you've got that balance that you can move into something else. So that's pretty much how I like to play it. And I trimmed a little bit off the top of some of my bigger positions as they grew in size rapidly, and having that cash balance now on the side is going to hold me in good stead if we sell off for a few days, maybe a week or so. I've got that cash to redeploy into uranium stocks or into other things that look interesting. So I think you just have to be super strategic if you're going to play this uranium bull market. You can't be loading up everything into the massive rips, because you will inevitably probably get a little bit burnt.
Sorry, I was being asked where canned risotto was, and we don't have any canned risotto. Um, so anyway, okay, so I agree. with everything you just said. Um, I think this is something bid discipline is what I think is the strategy of the game here going forward. Um, it's again, I have been so impressed with Gameco's strength that I'm probably gonna buy more of it. So I mean, that thing just cannot seem to it's Teflon. It just as someone has told me, it just will not sell at all. It just doesn't matter. It just shrugs off what the market's doing. It doesn't. I've noticed this. Okay, Cameco will like rip in the morning. Okay, and then it will start selling with the broad market. So, and by that I mean it will go up and down, but it will have a big jump up to basically insulate itself from any big market sell down. So even if the market is selling down, well, who cares? Cameco is only going to go down like 40 cents, and then it'll come right back up, and it's just like, oh my god. So I've been very impressed with that. But also been very impressed with Global. I think that's another one that just has absolutely just shown some real strength and resilience. I think if it continues to stay above $3, I mean that's going to be a pretty, for me that will be a pretty safe buy here within, I don't know, I'd say give it another couple days. Let's see what happens here. We've had such a broad market sell off here that I am actually somewhat expecting a little bit of a relief rally tomorrow. TQQ and SQQ would have you believe otherwise, that it's just going to be flat while everyone just sort of figures out what the hell to do. But there was a lot of relentless selling today, just absolutely relentless selling. We are seeing that things are going down on the ASX as well. It seems like Whitehaven's holding up pretty well. Adriatic is not completely shitting the bed. This is also good. Oh, did I say that? This is being recorded. Oh, shit. God damn, never mind. Oh, we're just a bit. Anyway, moving on. But yeah, it's definitely. I've heard the Nikkei is opening. I know the Japanese. What the hell these people have to do with uranium? We're talking some broad market right now, folks. All right, so the Nikkei is, I believe, down as well. There is a little bit of, I think the market got a little bit ahead of itself. There was also a lot of people that frankly just sort of got this inflation bit wrong. BMO was the only I think investment banker group or whatever that got it right. They were the only people that predicted the core CPI print to be correct. And while yes, gasoline prices have been going down, electricity prices continue to go up. This is a problem because they keep on going up every month, and there's no sign of relief, it seems. And the fact that we're going into a bit of a supply crunch, this could have contagious effects. And I think we're seeing a bit of some of the more speculative plays in the market. They're the things that are going to get sold. But what is showing some strength here is again, I will say this again, the places I have been telling you to be, which is near-term producers. So, I mean, even NXC, folks, NXC is firmly past where you could say their Japan news rally was. And by that I say, where were they on August 29th? I mean, they are now firmly below that. The same thing goes for Denison. Encore, same story. I mean, over and over and over again, you're seeing the same story of companies that are very much very below where they ideally would like to be if this is going to be some kind of a sustained breakout. Now again, seasonality, who knows? It has been it's hard to say whether we should totally expect an absolute just, bloodbath. Everyone is going to sell their uranium tomorrow because now they're panicking. Uranium has held up remarkably well. When was the last time that S triple Q was up like 16%, and uranium had just not completely, shit the bed and was down. Everything was down 20%. I mean that is the fact that we were seeing, just kind of some normal selling here. 6%, 4%, 5% is remarkable. Um, this is sort of a you can view this in two ways. There is resilience here, or your fellow buyers and sellers have given you a little bit more time to think about where you want to be. Again, I always have to frame these things, because everyone needs to remember that I come at this from a perspective of I just entered this market like a couple months ago. Some people have been here for a very long time. And, absolutely do not sell if you are holding Cameco at $10. Okay, just don't do stupid stuff like that. If you're holding Global Atomic at 25 cents, do not sell it. Um, it's just things like that. Look, these are long-term holds. Just embrace the volatility and, go have some tea or something. I don't know. But if you are a trader, or, depending on where your basis is, for me, my portfolio held up fairly well. Got a little uranium, got some silver, got some oil and gas. Um, I don't think I can handle another day like today without going back to cash again. I had built up quite a little, nice little gain cushion there that I was willing to sell down through. I didn't actually panic sell this morning. It was very surprising. I don't know about y'all, but I mean, I was up at pre-market and just basically saw S triple Q go up from like $4 or $41 sorry, $40 to $43, and I'm like, oh shit, it's on, because it was on. And it's like, oh boy, we're gonna have a fun day on the market. So but again, it's I don't know. Anybody? I've invited some people to come talk. I mean, please, everyone, just I love to hear my voice, but geez, how is everybody else feeling? Let's
Just
help us manage some
if I,
counterparty risk a little bit here.
if I can just add something a little bit further as well, and you mentioned it with the Cameco stock holding up so well, and have a look at Silex as well, holding up so strongly. I mean, you're right in terms of they're telling you something when these sorts of larger cap uranium stocks, and the quality holds up really well despite a 3% stock markets. It's telling you something. The small caps will always move around by a lot. The small caps being down by 7 to 10% is really nothing. I mean, that's just a normal day for these sort of small cap uranium stocks, small cap lithium, whatever. But when you've got the larger caps holding up, barely moving at all, despite a market rout, that's telling you, smart money, institutional money, family offices, that sort of stuff is still deploying into the sector and still liking the sector a lot. So yeah, for me, it just seems super bullish.
And I will say, I've been impressed with how well Energy Fuels is holding up. I mean,
Yeah.
that one has been, particularly in comparison to UEC, and it's some of its other contemporaries. I don't know what Encore did today, but
Tennyson was only up 2% as well. Kazatomprom was only up 2%. I mean,
mm,
that's not a whole lot. Yellowcake only up 1.2%. Obviously smaller over there in London, but yeah, not
yeah,
off all that much.
yeah. I mean, it's definitely. I think we're going into, the market it is clearly signaling here that it will buy
Mm,
Cameco now
mm.
at anything in the 29 mid 29 range. That's getting bought, and people are just taking that as a buying opportunity. um, I think where retail gets a little bit in trouble, just my personal opinion, is when you're buying some of the dips on the smaller caps. And then the smaller caps turn over, and it's like, oh, darn. So but even then, I think just the sell down in NXC is quite remarkable as to where I think the market is willing to put its money. I mean, we're down 10% here in just a couple days on NXC. And NXC, I mean, that is a principal deposit. And I think that this is really showing you this is NXC's management right now. NXC as a stock is basically being punished for their excess. I mean, I'm not kidding. Look, you compare NXC, a prime deposit in the Athabasca region. If anything is getting developed in Athabasca, it's damn Arrow, and they are getting sold off. Compare that to Global, a company that has a lot of insider ownership, that takes controlling costs incredibly seriously. And it is right up there with the resilience of Cameco. This is a message to the management of NXC. Get your house in order. Otherwise, when you have to start raising $1 billion to build your damn mine, the market is going to give you its middle finger. I am being completely serious here, folks. This is a very, I mean, you are now NXC. NXC has no business being as low as it is with as prime of a deposit as it is. It's profoundly disappointing in the way that NXC has performed here.
Hey, Chapman, can I just jump in here and say something?
Please, absolutely.
Yeah, so I do a lot of work with looking at different asset classes and a lot of ratio evaluation on all sorts of assets, commodities, indexes, and bonds. So what keeps me sort of, at peace with, being invested in the uranium space and other certain energy, like you said, oil and gas, certain precious metals, and mainly uranium, is that on a ratio basis, for example, if you divide CCJ by the Dow Jones or CCJ by the Nasdaq and S&P, CCJ is actually gaining on these indexes on a ratio level. So it shows you that strength and liquidity and money is actually going into assets that are holding stronger. So if you think about it, on days like today where we have some sort of panic, sort of sell off across the board, there are other assets that sell off, and then there's other assets that sell off harder. So when assets sell off, liquidity goes into the dollar, the US dollar, which gains strength. But then ultimately, the liquidity from the dollar needs to end up going back into assets that are outperforming PPI and CPI. So it doesn't matter if the indexes on a macro level break down and go into the dollar, but eventually liquidity from the dollar will have to go into stronger assets, and we've been seeing that over the course of this second leg up in the uranium space. And like you said, it's a whole thing where the producers or the soon to be producers get the capital fund flows at the start, and then the developers end up getting the second win liquidity, and then the explorers start to sort of rip otherwise as the sort of bull market sort of matures. So for a simple exercise, you can actually see, like, it's a very simple chart. You can divide CCJ by the SPX, and it's almost like a perfect reverse symmetry move where it encapsulates liquidity coming out of the indexes and going into stronger assets. On top of that, you can also see, that I use stuff like the gold to silver ratio. It's sort of breaking down now, which is also a key signal that I use to show that the commodity and energy bull market is just about to start, because we're in this huge sort of paradigm shift where, for the last decade and a half, the whole financial system is built on sort of ETFs and sort of pension funds and sort of money going into buying ETFs and stuff like that. But if the ETFs are sort of connected to, major sort of companies in that make up the bulk of the S&P 500 and Dow, if these assets are selling off and underperforming PPI and CPI, technically it's a bad investment. So then there's going to be this major sort of shift where capital will eventually have to find a home to assets outperforming CPI and PPI. And you can actually see this as well, where you go, if you divide CCJ by the producer price index, and if the chart is going up, it means that CCJ is doing a very good job outperforming inflation. And I think we're moving into this macroeconomic environment where rates are going to be higher, because the 2-year yield is there is a big gap between the Fed funds rate and the 2-year yield. And I think going into 2023, 2024, that the Fed will have to increase interest rates to catch the 2-year yield. And there's going to be a massive repricing of the indexes, and capital is going to have to force to shift to assets that excel in a high inflationary, high interest rate environment.
Yeah, and that's doubly, and that's just going to be doubly true for, when you're looking at high inflation environments and you're looking at these mines that are going to be built. Yeah, people need to remember, like, Paladin is an existing resource, Boss is an existing resource, Cameco is an existing resource. These are built mines. And Global seems to be able to handle their cost. So, again, NetSum, what's up?
Hey, yeah, I just wanted to follow up on your comments on Cameco, NextGen, and Global. So from my time just like watching the uranium sector, I've been in it for about 3 years or so longer than some, but certainly shorter than most. I think we're still definitely in a regime where macro moves dictate whatever basket of uranium stocks are going to do day to day. But I think it's on days like today where you have broader market downturns that it's great to see, uranium being less red, as it were, and showing some resiliency. With respect, and if you actually look at the Cameco chart, over the last 3 weeks or so, from mid-August into mid-September, it's actually done the exact same thing as it did last year in 2021, but just on a broader uptrend. So that's positive to see. You can call it seasonality, whatever. On the comment on NextGen and Global, so whilst we're still in this sort of macro regime where all the uranium stocks will either be red or green all on the same day, it's not really as if some are doing more than others. Some are just rising with the tide and lowering, etc. But because I think you're beginning to see, a bit more of a light shone on the nuclear industry, I think this year you have started to see a bit more of the differentiation, perhaps as AXCAP said, between those that are nearer term, potentially getting a slightly more torque on the upside versus those that won't be a mine for a long time, such as NextGen. And the other thing about NextGen is that if you look at the history of the investments there, particularly through the investments from like Li Ka-shing and then subsequently Queens Road Capital, the largest fraction of shareholders in NextGen, their return profile through convertible debt is very much different to just holding the equity. And so NextGen, it's not really a stock for retail, I would say. You know, some stocks are more retail friendly than others. And in my opinion, you know, when you look at the investment profile of NextGen, I would say it's less retail friendly than maybe something like Global. And just a final thought, I guess. Similarly, actually, some of the great points are made by AxeCap there too, about sort of ratios. You know, if you look at, say, SPN, which is the subset of the S&P 500 dedicated to energy stocks, SPN is what it is on TradingView, and then you just divide it by SPX, which is the total S&P 500. You can see that it's formed this nice upturn, basically stating that, you know, the composite value as a percentage of stocks within the S&P 500 weighted towards energy has been increasing over the last few months. You know, that signals like sector rotation, which I think has been widely discussed on spaces such as these and others in the past. But you kind of have to think about the mechanics of large institutional money making that cash rotation. And in order to rotate out of various equities and into others, you do need to sell. And so that's why I think red days like today can be especially interesting to see where the money actually ends up in some places, which, you know, I personally believe will be the energy sector, and then the other sectors where it may never return, which may be, you know, various retail or tech-based sectors. So just some thoughts in response to both your points and AxeCap there.
I would take your point as to NextGen. I think it's a good one. And that it may not be as a retail-friendly stock as, say, a Global or something else like that, but they're still going to have to raise capital here, and they're going to have to raise capital. You can't do that whole thing with debt, simply because I doubt you're going to find debt holders who are willing to basically, you know, just not have interest rates for 4 years while they build the thing and they don't have cash flow. So they're going to have to go to the equity market. I think, you know, it would behoove them to, you know, become a little bit more equity investor friendly. So I will say on, you know, as what we saw today in terms of, you know, energy was only down 2.5%, which makes it the best performer. And utilities were not that far behind. And that makes perfect sense, at least for the utilities, in that energy bills continue to go up, and that's good for utilities. So it's really no surprise that they had the strength of all the utilities. I think Southern Company, here in Georgia, I think they were only down about something not terrible, just 2.4%. So it's not bad for a day like today, when the broad indices go just, you know, deep red. So, who's next?
Yeah, Chapman, can I come in again?
Of course, everybody talk anytime. There's no formality here.
Yes. So, I think, you know, there's one thing to just focus on, you know, exactly going straight into the uranium sector, but I focus more on like capital fund flows, and I think because it, you know, the whole uranium sector at the moment, it's a very, very small space, right? We're having higher inflation costs, and a lot of the work I do is to do with ratios. So, you know, if you look at the whole SPX as a standalone asset or a standalone currency, um, you know, even the lithium space. So, you know, I think that the, there's a huge paradigm shift where the world is pretty much going back to sort of basics, where in a higher interest rate, higher inflationary sort of cycle, um, energy, food, agriculture, um, these are the areas that outperform over companies that have a lot of debt, struggle with inventories, and we're actually seeing it's almost like I'm seeing a huge Titanic sort of do a 180. So I think personally, uranium right now, it's just going through this little volatile period where it's sort of getting repriced to sort of capture these capital fund flows. And like you said, these companies still have to raise capital, but everything in the uranium space usually goes off the whole spot price of U3O8. And from all the research that I've done, I think going into October, we're going to go through one of the largest utility contracting inflows coming in, which should push the spot price up. I would almost be convinced that the spot price would be a lot higher by Q1 next year than it is now. And if the spot price is trading at around 65, 70, $80 per pound, what is that going to do to companies like Camco? In my
Oh,
opinion,
chemical will just be.
quite high.
I mean, they'll be printing money like nothing else.
Yeah,
Just
exactly.
because a lot of their contracts they do have some adjustment to spot. I think one of the most I take your thesis and I say it as a possibility. I would also say that there's another possibility as well, and that we saw that we have potentially seen something of a foreshadowing here in the news that we saw today, in that the French are still more than happy to take Russian enrichment. They have some of you may have seen my tweet about that. Shovelstocks was a little bit confused because he said that Urenco had canceled their contract, but this was not for Urenco. This was from Framatome, which has a fuel fabrication facility in Lingen, or whatever the hell it is, wherever Emsland. Nuclear, I probably messed that pronunciation too, but basically they have a fuel fabrication facility there, so they're taking this enriched UP and they're making it into fuel in there. So that's where this is going. So there's also an equal possibility that all of those utilities will be buying as much Russian enrichment as they can. Now, that may happen, that may not happen. In other words, what I'm telling you is watch the spot price like an absolute hawk. And if it's not doing what you think it's doing, what you think it should be doing, and what you perhaps know it should be doing, like, you have to be really critical here, because, someone could sell out from under you and you could be ending up kind of selling in the red. So just something to be very, very careful about, something I'm going to be very particularly careful about. We may see some contracting, yes, but are we going to see, $70, $80, $90 uranium this fall? That's a bit out there, I think. It's not quite proven that that's going to come to pass yet. Liberty, you've got your hand up. Let's go.
Hey, what's up, man? I got a question for you. You may not know the answer, but I'd really like to know. And this may be a total nothing burger, but it does intrigue me. So I would like to know how many, if any, of these upcoming 120 whatever reactors in China are going to utilize the Yangtze River for a water source.
That is a really good question. I actually have no idea.
I think that's worth checking into, man.
So tell me why that's a problem. To give me some background. To give everybody else some background.
Because the drought is absolutely murdering Asia, and the Yangtze is it's in bad shape, and it's a culmination of a decade of drought, and they're on a nationwide drought alert right now. And so if this weather persists for a year or 2 or 3 more, then it stands to reason that you could see significantly lower levels of water in this river. And if they're relying on this river for a water source for nuclear, then that could change things dramatically, right? So it could be a nothing burger, but it could be a big deal.
So China, as I'm looking this up here, China has historically built their plants on the coasts because that's where most of their population is, and then they're just able to use seawater for cooling purposes. you don't necessarily need to be on a river to cool a power plant. If you have a sufficient water reserve, like up Arizona, the point, or excuse me, the Palo. God, I'm so used to saying Point Pro. I'm sorry, the Palo Verde plant out there just uses wastewater from Phoenix for cooling. They don't actually, they're not on a river. They have no other water source other than the treated sewage that they get from Phoenix. And they are able to, keep those power plants humming along in the middle of a desert. So that's, again, it's not an engineering challenge that is insurmountable, but it can definitely limit where you can put a plant. Like you may end up having to build them closer to population centers where you have sufficient wastewater from a metropolitan area that would be able to be utilized by the plant itself. So, Phoenix is a fairly substantial metropolitan area as well. It's just something to think about. So yeah, that is an interesting question. It's something I'm gonna put that on the back burner in the back of my head. I just sort of wonder about that. I need to start marking their reactors on maps and see where they put them. Because again, not all. I mean, there are, let's say, reactors in Kansas, for instance. I think it's the Wolf Point or something like that reactor. Anyway, that's just cooled by a large lake. It's just, and they just have this lake reservoir that's just there for that reactor. So, anyway, that's that. All right, we've got P coming up, ready to take it away. Give us the most bearish take possible, please.
Oh, I'm not talking about the macro because I'm not going to repeat what's going to happen in the market because I've been consistent for the past few months. Anyways, I'm just responding to Liberty because I think China is actually building the first nuclear station in Hubei province, which is, I suspect it will use the Yangtze River to cool off the nuclear plant. I think that's the plan. But whether they will do it on a very large scale, I don't know. I just briefly searched on the Chinese websites, and I think they've got some plans. But I think most new nuclear plants will be built at the coastal area rather than along the Yangtze River. But I think that could be a possibility. I think they may build more nuclear plants along those in those regions, but I don't think they will build a lot. That's my take.
Good stuff. I appreciate that to both of you. Thank you.
I mean, I guess a good question in general, I don't know if anyone knows, is are there any existing nuclear plants along rivers anywhere in the world?
Oh yeah. Oh yeah. Almost most of them inland are going to be on the river. Vogel's on the Savannah River. Hatch, or not Hatch. Watts Bar and what now?
Zaporizhia, all the French reactors.
Oh yeah, Zaporizhia is on the Dnieper. Most of the inland French reactors are on rivers as well. They actually have a lot of the rivers are actually dammed in a way that ensures that the nuclear reactor itself will have enough water for cooling purposes. A lot of what has gotten the French in trouble is that they've had so many reactors online that they're now having to, run whatever reactors they have at like 100%, and they are stressing their cooling water supplies. That's a theory of mine, and to the point that they're having to go back. But I pull back on that. I'm not necessarily certain, though. So that's just a theory. But
thanks for clarifying. It's not something that, I know too much about, but that's good to know.
So, Brett might be able to tell us. Anyway.
Hey, this is Brett. I just wanted to jump in here real fast. The French the cooling most inland plants are on rivers. You can look at the plants in North Carolina and South Carolina, in addition to the plants that you mentioned previously that are all on dammed rivers and have reservoirs. Lake Wylie and Lake Norman in North Carolina were built as reservoirs for nuclear power plants and everything. The French plants and the river water or temperatures or changes in what's going on with the French plants has to do with a corrosion issue that's going on in pipes in their cooling systems. They found it earlier last year, and they found it affecting additional 12 reactors. The French fleet is not designed the same way as the US or some other fleets. It's designed to operate more flexibly and to have more units down at down for maintenance and outages and longer maintenance and outage time frames than some of the Western fleets, namely the United States, because the operational characteristics and performance requirements are very different for how the nuclear plants operate in France. So the issue with rivers in France and nuclear plants is that river temperatures in France and in Europe have been on the rise over the last several years, and French nuclear plants, essentially, as the temperature rises higher in the rivers, have to derate themselves. They can, or their efficiency goes down, so they produce slightly less power. It's not a lot. It's a percentage or so, depending on the change over the last couple of years, but it adds up when you add it across the entire fleet, and then you have 12 reactors that are also shut down for maintenance and corrosion issues.
So, Brett, let me ask you a question real quick. We're seeing the French are right now seem to be able to maintain their restart schedule. They're not falling off that too far, maybe just a couple days here and there. Are the French reactors, should they be called upon, are they going to be able to basically run like American reactors over this winter period, do you think?
Well, I mean, again, it just really depends on the whole scale up and what France is doing. These reactors can operate at higher capacity factors, but they don't typically, because that's not what the French grid needs. There's not a lot or any real challenges technically, especially as soon as they can get over dealing with the corrosion and maintenance issues and struggles that they're having right now. I think it would be a while before you would see 95, 92% capacity factors, just because those reactors operate differently. They've got additional control rod banks to operate with power shaping and flexibility to allow load following, and they're just differently designed for different purposes. But that doesn't mean that they can't stretch their operational characteristics and be operated at higher capacity factor levels. So that's the plan with France right now. They want to ramp up all this nuclear power that is currently in planned maintenance or outages, and they want to fix the ones that they have their struggles with. And then they just want to not essentially do those load following operations, or do they might do different outage schedules and things like that, but that's going to become the answer to what they would want to do if they want to operate the plants at higher capacity factor more often, more frequently, all that sort of stuff. It's not a major technical challenge.
I mean, I guess for me, the question is that, we know that Europe is going to be perhaps going through some potential natural gas shortages, depending on the availability of coal. I have kind of a theory as to whether, the French plants may turn into, hopefully rock stars for European grid stability this winter, but we'll see. I was kind of curious as if they could handle that. Patrick, you've got your hand up, but we'll see. All right.
Yeah, question for Brett. You sound like you're you know most, you know a fair bit about the French reactors and all that sort of stuff. So I was just curious
So
if you,
yeah, Patrick, before you go any further,
yeah,
my expertise is mostly in the U.S. nuclear
okay,
fleet, but the French fleet is derived from that technology originally. My expertise is around pressurized water reactors, so I know enough to be dangerous. But again, my
okay.
expertise and my training comes from the U.S. fleet. So
Okay, well, this is a pretty basic question. I just thought if you could give us some more color around when most of these reactors were built, what sort of lifetime or time frames they've got to run, all that sort of stuff. Do you have that sort of basic info at hand?
Well, I mean, I could go back and take a look shortly. I remembered putting this on some slides recently. The U.S. fleet is the oldest fleet in the world, and the average age of the U.S. fleet is around 40 years. It's like 38 or something like that. Every fleet other than that trends down from there, right? Okay, so the French average fleet age is less than 40. I don't know hold on. I'm going to a computer in another room where I think I have these slides. But essentially, these reactors again are very similar to pressurized water reactors around the world. In France, 40-year lifetimes were what they were planned for. 60-year lifetimes have been, very, extensively relicensed in many operations and many places. So, I don't think there's an age challenge or discussion around the existing fleet, whether in France or, to a lesser extent, or excuse me, to a greater extent in the United States, where, you're seeing discussions around retirements and all that. Hold on, I think I just found these slides. All right, the average age of the French fleet in 2020 was 35 years, 37, 35.6 years. So again, slightly younger than the United States. The world average is about 30 years. The Russian average is 27. The South Korean average is 21, and the Chinese average is 8 in 2020. But some of the Russians have a hump, so theirs was more, near the average or above the average in 2015, but they added more reactors, and so that drags the average down, right? So France fleet slightly younger than the U.S. fleet, but still one of the oldest fleets in the world and older than the world average.
Yeah, and a lot of these reactors would be able to, if well maintained and money is invested in them, they could run as far as sort of 80 years and that sort of thing.
Well, again, that all also depends on the regulatory environment and the legal structure. Again, I'm not an expert on. I'm an ex. I know about technology. I'm even less of an, and I know about U.S. regulations. I'm even less of an expert in French regulations. So I don't know what the French plants were originally licensed to. I imagine it was a 40-year time frame. Essentially, they were derived from similar U.S. Designs. It's similar, very similar technology. I would imagine the regulator in France has invested in the processes to look at extensions or to look at longer operations. It would really be a legal and regulatory question, but yes, around the world we see pressurized water reactors plan to operate beyond 40 years into 60 years, beyond 60 years, all that. So very possible.
Yeah. Very good. Cheers.
So, Liberty, if you had something you want to talk about, I think you had your hand up. That's right, you had to answer a question. What else is on everybody's mind? I don't know. Usually I'd have Alex here to ask a question, but I think he's off this week, as I remembered to myself. So, as we move to Tuesday, but yeah.
Well, I would just like to chime in that we've been talking for the last couple of weeks, especially since that run up on the Japan starts. There's an obvious decoupling within the uranium sector itself. Okay, and I think that's becoming more and more clear. And we were thinking about it, how it might be the fact that you have the better quality names like the Camicos. We noticed the same traits and qualities in companies like Global and even Paladin, outperforming the rest of the sector. All right, so they're breaking key resistances with clarity. All right, and they're doing it a bit more decisively when a lot of companies like Energy Fuels look like utter crap. I mean, it looks like crap. The technicals are really bad on it, and I'm just suspicious if institutions are investing a bit more differently than retail on the run up. And this is why you see the divergence. It's hard to imagine that retail's doing that good. Maybe they are, but the charts are telling us that there's a clear difference in these equities, and they're being traded different. And this is important because for the last 6 months, they've had complete and total confluence with one another, and they give you all these clear indications that it was a time to buy or a time to sell. And now it's very mixed. It's very mixed, and there's a clear difference between a lot of these names. And the thing that they have in common is that they either are producing right now like Cameco, or they are soon, right, like Global. And they, I think it's something to notice, because I think something's really happening in the uranium sector itself. And I think if you're not positioned correctly, or depending on how you are positioned, can really affect the outcome here shortly. And I think the next big run, whether it's up or down, whatever happens next, if there's a big move up or a big move down, I think that's when we're going to really see the answer.
Yeah. Well, the uranium market is sort of, it's starting to behave the way that I wanted it to behave. Well, I was so upset that it wasn't doing this when basically we had that day back in August and I saw Anfield Energy up like 20-something%. And I'm like, oh God, we're trading like a meme stock. Great, fantastic. So, it seems like, in this run up, perhaps this is because of certain market forces. There there's capital that's sort of looking for a safe home. Maybe you've got people that they don't necessarily want to go into oil and gas, but they like uranium. So Cameco seems like a nice safe bet. The question for me is that if we have some capital here that is coming into Cameco is, it is maintaining a fairly decent volume. It's not great, not terrible. How much of this is tourist volume? And that sort of remains to be seen. I think everything is, in terms of investing here, it's still, I think it's a cautious approach here. I'm getting more and more comfortable with holding Cameco. I'm getting more and more comfortable with buying Global. I'm getting more and more comfortable. I'm a bit more concerned with the Australian names for once. I think Boss is a little bit up there for me. I think Paladin is a bit up there for me too. I want to see what those two do. As you know, I love Silex, and Silex is amazing, and it's just nothing holds it down, and it doesn't quite go to the moon, but it's nice, it's stable. The market seems to like Silex at 350, and we had yet another retest today to 333, 331. It was there and gone so fast I didn't even get a chance to buy it. So, for me, I think there's a lot of upside in Silex there as well. I think it's just, I don't know. I know Liberty, you've actually come out and you have taken the dangerous step of saying that you have sold some stuff, and as you know, that is the cardinal sin in the uranium Twitter. So, but I think with good reason there, and I think a lot of people are beginning to agree with that sentiment just a little bit. Maybe not all the way going as quite as crazy as I did, of course, but I think what Patrick is talking about, like rotating out, not being afraid to take some of these gains, just to make sure you've got capital that's able to be deployed, should the market turn down further. I think the next couple days is going to be as you've said it once, you've heard it before, say it a million times. The next couple days is critical. And I think we are. Would you agree with that, Liberty? That we need to see, we need to see some buying pressure here on some of these names. Not only in Cameco, not only in Global, but also in NXE. We need to see. I've been very impressed with Energy Fuels actually. Maybe it's because I haven't been trying to just throw them under the bus so much, and my chat with Chalmers was very nice, and I'm gonna have him on here one of these days. I need to talk to him about it, but I think yeah, it's all a little bit up in the air. You kind of have to, you get to the end of the day and you kind of look at the view, and I'll be honest with you, I didn't really realize just how far some of the names, some of the equities had sold down today until I actually started to go through all of them, and it's like, oh wow, actually we are down quite a bit. So it's
Yeah,
yeah.
that's right.
I've go on, please take over.
Yeah, I mean, if you're not Cameco or a couple of other key names, then you had a pretty bad day today. And more importantly, you lost some key levels. So we've talked about Cameco at 28.40 a lot, right? 28.40 is that new $20, right? In Cameco, you lose that, you're going lower. Well, a lot of these uranium equities have already lost their equivalent to that, and that happened today. And they could get it back. You don't know what a day may bring, but it's ugly. And again, this is why I've been pointing out: don't chase this move, don't buy this move, because it didn't look that strong. It broke out. It got a technical break, but the breakout wasn't what you want to see. On a good breakout, you want the volume to come on the break itself, not the ramp up to it. You don't want to spend all of your energy getting to resistance. You want to spend it breaking through resistance. And uranium did the opposite of that. And then this is why you've seen a lot of these equities struggle once they got over this hurdle. And it just doesn't look good. They put in a lot of divergences, especially on the short-term time frames. A lot of the weekly time frames actually look okay. And it's for this reason that I kind of kept a yellow flag rather than kind of going full orange, just because, well, maybe you kind of have to wait and see. It really is a wait and see moment. You kind of do have to look. If you're in the green, that's fine. You can hold. That's okay. But if you're not in, you don't get in here. This is not a place to buy uranium. There is no buy signal right here at all, right? And this little pullback is not like some new opportunity. In fact, I actually kind of expect it to take another little ramp up here soon. And I think once we see that candle, once we see what happens with RSI and other technicals, we can gauge it. But I would suspect, just gut check right now, if I had to guess and predict, I would bet that it takes one more ramp up and then falls back down.
Okay. Sorry. I got most of that. I'll have to go back and hear the recording. Unfortunately, there was some smoke alarm going off. Someone was making quesadillas, and anyway, we're all fine now. Anyway, fire alarms work. So, oh yes, NetSum, you got your hand up. What's up?
Yeah, just to follow on from what Liberty was saying, I think I'm sure if you looked back at all the recordings of these spaces and other uranium spaces from several months ago. Probably there's a bit of repetition, to be fair, which I think is fine, about looking at key support areas every week. But it's reasons for that I'm a big supporter of the best of both worlds, and that you can have a core position and trade around it as well, because if this year's taught us anything, it's that the moves up or down come when you least expect it, and a strategy where you have a core position but trade around it can, on the one hand, keep you in the game with that core position, and on the second, satiate that need for looking for opportunity if you're someone who's interested. I mean, let's face it, we're all interested in the space. We're all listening to this space now. We've listened to other spaces before. And I think a lot of us would be lying if we felt that didn't impact, the frequency of some of our investing decisions. And I think it's absolutely fine to have a core position and then have, another portion that you can trade around that, satiates that hunger to invest on a shorter time frame.
No, that's very well said. I 100% agree. That's exactly right.
I completely agree as well. My core position has always been Silex, so yeah. But anyway.
Yeah, I think the only thing I'd add on that is just like what I try to do sometimes more effectively in execution than others, just like make an opinion on like what these are worth plus like a margin of safety on it, right? And like if it falls to the point, just buy the damn thing, no matter what JPOW's doing, no matter what's happening in the world. If there's a certain amount of profit that you don't want to give up, either set your stop loss or just sell it, right? Because like we're at least I've gotten in trouble, and I understand like that other people have made like the same mistakes like over the years. It's like, yeah, right now you're sitting on a nice green position right now, and you're like, I can handle 5%. Then tomorrow comes and you lose another 6%. All of a sudden you're in the red on a position. Then your mindset shifts, and it's like, oh shit, I'm losing money. Well, clearly this is just going to go down for the next couple of weeks, so I'm gonna sell it, salvage it, make some of it back by just like buying these same shares a little bit lower, right? And then I'll net out. Yeah, you may pull it off, but a lot of times, at least for me, it's like you end up selling something close to the bottom. So I think make an opinion what it's worth, what like how much of your profit margin you're willing to give up, and just either automate it with bids or just follow through on it. That's like my only 2 cents on that, because like once you get emotional, it's when you make mistakes.
Yeah, Austin, just going off what you said, just for everyone in the long-term investment space over here, we got to remember that the more volatility something that trades like uranium, the more volatility in the short term ultimately leads to a greater expansion in the longer term. So that's how usually assets develop. So if you go look at any sort of uranium stock on a monthly or weekly or 3-monthly scale, the trend is up. So regardless of whether you have a core position and you're trying to trade short term on a different sort of portfolio, that's a perfect like it really sort of that's a really good sort of strategy to have. But mainly for the longer term, the more volatile something is in the shorter term, it gets distributed and expanded on the upside in the long term.
Yeah, I mean, I agree with you. And like I don't know, it logically feels like it should be relatively straight down for a week from here, but I don't know. Tomorrow is the purchasing power index data. Maybe that comes in cool, and everybody's like, okay, inflation's bad this month, but next month is going to be great. All of a sudden, we have record put positions and short positions that we had before today. I'd imagine they're much bigger now. Maybe we run into another ridiculous short squeeze going into the
not again.
Like expiration this weekend, or sorry, this Friday. I have no idea, right? I'm not necessarily trying to call that shot, but I don't know. It could be like the ultimate bear trap this week, followed by massacre next week. I have no freaking idea, but this stuff could be surprising and volatile. There's so much data coming out this week.
Robin, you had your hand up. You're not getting away that easily. What's up?
Hey, how you guys been? I've been not too active on the spaces, but I've still been, paying attention to uranium. Not trying to blow my account up, but just to comment on what you guys are speaking about, I've been writing puts every time this dips. So, I'm probably going to be writing another put coming up pretty soon. But my question was, can anyone speak on how the institutions traded uranium on the old bull run, or the last bull run, I could say?
That I don't know. That would be a project. Unless anybody knows that, because I don't know it off the top of my head.
Yeah, I was kind of looking for an easy answer. I know I could research it and all that.
I can maybe give it a crack. Could you maybe ask a more specific question about how they traded it?
So I mean, sure. I just don't from my knowledge, and I sound ignorant, and I am ignorant. Like I said, I've been a lot of personal changes in my life currently, so I haven't had too much time to pay attention or do any research. But when did they buy? Did they buy the name brands? Were they trading everything? Did they buy? Were the institutions involved? Even would be a good question. I haven't seen any institution activity so far, and I'm just I'm curious. Did they drop the price so they got a good buy and scare the market and shake out the hands and then it rocketed up? I don't know.
Okay, I'll try to answer that in the best way I can. There's a lot of different mandates for a lot of different institutions doing lots of different things. First of all, depending on the size of a fund, if you've got a fund that's only working with a couple of $100 million, then they can get returns around the illiquidity of smaller stocks, whereas a big fund can't. They can't get a big enough position to move the bottom line, and they're also scared shitless about getting out if there's no liquidity. It's like a lobster trap, right? So you get small funds doing things and small companies, they can be more agile, and the bigger funds that will have a stricter mandate with their shareholders, funds that are involved in superannuation funds and whatever, they will only go to the big names where there's liquidity. They can't do anything but do that. So as companies actually get bigger, it almost becomes a bit of a self-fulfilling prophecy. As there's more liquidity, there's greater market cap inclusion in various indexes and so forth. You actually get the best of breed funds then starting to have a look at the space. But you're never ever going to get the big funds investing early stage in small companies. They've got too much to lose reputationally. And it doesn't move their bottom line either. So there's absolutely no point. The other part of your question was we're seeing institutional action now. Absolutely. If you look at the top shareholders in a lot of the companies, even smaller companies, there's boutique funds that have positions. If you look at the buying action on the screens recently, you can see there are institutional orders rolling through. They're very well organized. There's algorithms at play, etc., or you've got insto operators working these trades very actively. Even today in Australia, the market's down 2.6%, but the uranium stocks are acting in a very orderly way. There's actually a lot of liquidity on the buy side. It's not like retail are just sort of there getting scared and things are gapping down and up. There was a bit of a gap down on the open, but then you're seeing a lot of volume just working through things in a very efficient manner on the buy side. So, it's just one day. If you get another 10 of these, sentiment gets bad enough that it doesn't matter if you discover the cure for cancer, your share price is going down, right? So, I don't know if that helps answer your question at all.
Yeah, it does. And one little part of was there ever manipulation? Manipulation in the sense of the stock price or even the spot price of uranium, because this is something that I wasn't ever researching. I obviously have to Google this, and but if
yeah. Look, I think manipulation in share prices is almost sort of starting to border on a bit of conspiracy theory for traders who don't quite know what's going on, so they start to look for things that they don't understand. Know what I mean?
Well, I mean, I'd beg to differ. The number one stock that I trade is Carvana, and that's probably the most heavily manipulated stock ever. I mean, up 12% yesterday, down 12% today at open. I mean, but that's a whole different industry. That's a con industry. But just like
Cool.
the actual, were they, when they really did enter, because I know you guys were talking about it earlier, where you want to see that strength after it reaches the key levels to push through. Were they ever, purchasing heavy? I don't even know. That's a bad question. I don't know. I don't really know how to word this question and sound like I have, more than 10 brain cells. So, I'm gonna drop the bullet.
I could chime in a little on that because on the Japanese news, you had big gap opens, and on massive volume to start. And I can tell you that was likely not retail. Okay. Retail's not going to do that like that. It could have been, a mix, but I think some institutions were buying down there for sure, especially the names like Cameco. Now, whether they're buying up here or they're distributing up here is a different question. But you don't get moves like that just from retail because you have to understand it wasn't just one equity, it was all of them. All of them. And I just don't think retail was doing that.
Thanks.
Yeah, I think that's probably a good point. I think the best thing to always remember is retail is that, we're all price takers. Unless you've got a couple $1,000,000, to the point that, you can go buy some options and you can, get some dealer to basically have to go buy a couple 100,000 shares of Cameco to, make sure that their risk management department is going to be happy with them. It's sort of hard to manipulate the market. I mean, it's just the way it is. There is. Look, there has been market manipulation of things in the past, but uranium is just so opaque that it's sort of hard to, like. I don't. There's nothing to really manipulate. What are you gonna do? Make uranium cheaper? I mean.
Oh, it was manipulated, all right. That's on that last sell-off in April. That was a huge Wyckoff pattern. That was distribution. That was institutional. That was algos for sure.
Yeah, and I think that was and there is a risk of that happening here. This is sort of what I'm saying, that the fundamentals isn't necessarily matching the price action. I mean, I'm not trying to be, flippant there or just upset that I sold a little bit too early. I'm really telling you that, I wouldn't wait around for third quarter earnings to find out, because, you could find yourself on the wrong end of a 20% down day. I mean, just take today's opening. Silex went all the way down to 331. I would love to buy Silex at 331, but it was, it was there and gone before I even had a chance to even look at it. And I guess because I didn't have an order in, no more shares for me. But just, this is not really a market that's particularly if you're trading in the Explorer class, more explorers, early term developers. This isn't really something that you can take your eye off of, in my opinion. You've heard me say this a million times before. If I don't say it a million times again. I don't know. Liberty, do you think the next couple of days are critical as well?
I mean, sure. I think it's more critical of, if they break key levels or not, and do it with volume. I mean, I don't know, not like that. Short answer is not really, not any more than today, right? I want to see the weekly candle now. Okay. But in the case of Silex, I mean, I'll bet you $1, Mortimer, that we touched that 50 on the weekly, which is a lot lower than 330.
I wouldn't be surprised. I mean, I'm not really deploying a full position until it gets down to $3, but at least. So, we'll see. But as far as what happens there, if you got your hands up, just go ahead and talk. And go ahead, whatever.
Thanks. So I'd absolutely agree there with Liberty about just sort of broadening the time periods over looking at all your favorite stocks, like more on the weekly right now more than the daily. I think the market through 2020 to 2021, ran at a higher velocity, that maybe the daily was more useful than it has been this year. Certainly think the weekly is prudent to look at. And just on the comment, I think it was from Robin, talking about sort of the fraction of institutional investors from the last uranium bull run. We certainly have seen institutions get invested in the last few years. But I would still say that is a great indicator, actually, to keep an eye out for the state of, the bull market at large, because I would still say it's very early days from that perspective, in that you are seeing the boutique institutions, perhaps like Peter suggested, but you're still not seeing that much in terms of bought deal placements and financings as much as other commodity sectors. I mean, for instance, in the gold sector, I mean, gold hasn't had a particularly good year, and I know some people in that sector have been saying it's been a bit of a drought when it comes to financings. But they are still getting done, and there is still support from the institutions, much more than what we were seeing in uranium last year still. And so the only slight downside to uranium having a good year still this year, despite the overall markets not doing so well, is that for your explorcos and junior companies to take a real strong look at their cash balance in the run-up to tax loss season into the end of this calendar year, because they'll really need to capitalize on any gains year to date that they've made in their share price if they're going to want to raise at a higher price than they started the year at. And the issue there is that because there's less capital floating around to invest at all from other sectors as well, the terms of those financings may not be as sweet as they were last year. And so this is where you get things from straight up bought deal financings where it's just a single unit and no warrant, to when you get more cash constrained as an environment, you start to see the warrants and full warrants show up in those financings. So I was actually toying with the idea maybe of, if I was adding to any positions, to only do it once financings are announced, because at the end of the day, for those cash-constrained companies, it will be the institutions which will have their say on what price they're willing to pay, because the management teams will know that that cash is hard to come by in most instances.
Oh, and even then, you want to be looking at the share structure. And certain people in this space harp on that all the time, and it is true. I mean, the one thing that I think is really important is looking at the warrants, and for certain enterprises, that kind of puts a bit of a cap on where they can go. So even if you've got the most amazing deposit in the world, and you find something great, and all of a sudden you go up, 20%, but then you bump into these, massive amounts of warrants that all start to get exercised. And
absolutely,
yeah, so it's something
warrant overhangs are one of the biggest killers of potential upside, especially on these junior companies.
Yeah.
It's actually one of the things that I would look at first in particular, especially for these younger companies, is if these companies exist because they've been rolled up from prior projects, other commodities, for example, and there were financings back then that still had these 5-year warrants or something. You just don't know who's holding on to them, and they can really cap the upside. It's a bit of a trope, actually. I live in Canada, and when we look at junior miners over here, and you see something shoot up by 50% in one day or one morning, typically the first thing I do is to look at if any warrant expiry dates are due, because sometimes the management teams will MacGyver a situation to try and get some warrants exercised.
Oh well, no, jeez. I was looking at Can Alaska. And I was pretty excited about that deposit. It may still turn into something. I mean, obviously they found something, but it's just way down there. Just in the fifth ring of hell, in terms of trying to get a bore shaft down there, because it's all it's. I guess they call it hydrostatic pressure. Then I went and I took a look at. Well, I get to their warrants real quick. I took a look at their warrants. Their total dilution would be 37% just through these warrants, and they're all on average 67 cents. I'm like,
Yeah.
Oh wow, that's okay. I'm not excited as I was about this one. So
I mean, if you look at, in the gold sector, for example, yesterday, Marathon Gold, huge 4 million ounces in the east coast of Canada, very well developed project, close to figuring out a final MRE and feasibility study, did a financing at 3-year lows for about 53% of their current outstanding shares, plus a warrant. I mean, no one is safe from this sometimes. And actually, I remember I remember the time when GoVX and Global, for example, were both between 20 and 50 cents. And I think, there's been a lot of discussion between, GoVX versus Global, etc.
global all the way, global every
Yeah,
day.
yeah. I mean, I chose Global. I didn't really feel
GoVX,
like GoVX, but
they're treading
the
on.
thing is that is the example of where share structure, I believe, did have some part to play in the final outcomes. Because at some level, all of the rising tides of uranium sector, that we've had in the last couple of years should have taken GoVX much higher if it had a better share structure than it did, and unfortunately it didn't. And so it's one of those kind of, you can be in the right place at the wrong time, and you can also have the right project in the wrong company share structure as well. It's just equally as valid statement.
Yeah, I completely agree with that. Now, I mean, I'm kind of curious. I have to look up here what the difference between these two are in terms of market cap, because I think, yeah, okay, global is quite a bit bigger. And I mean, I think I think it goes back to what I was really trying to get at earlier with NXE. I mean, yeah, I get it. NXE is not quite as shareholder friendly because they've got Arrow, and oh, they're so special. Because they don't have to be, or whatever, and they can just pay themselves huge amounts of money for not being in production. Like, way to go, guys, way to go. But at the same time, you have Global that has really gone out of its way, and I think the most important thing about Global is it has a reputation for being shareholder friendly, and it has huge insider ownership too. I mean, and I think you see that in that can be quite a boon for shareholders, because
Yeah.
Stephen Roman does not want to dilute himself. So
Well, back in
now,
when the day when Global and GoVX were similar share prices, a lot of people will have told you that Stephen Roman's um, former project, Heart Gold, a gold mine, a lot of shareholders were burnt by that, and so there was a lot of mistrust around Stephen Roman still because of that. So there was a bit of scorched earth, but I wasn't affected by the Heart Gold issues. But it's one of those things where hindsight obviously makes things clearer. Just a final thing that I actually wanted to say about NXE. I had a conversation with an early investor of NXE who'd followed that project for a long time. And one of the things they had mentioned as well is that NXE could sell a royalty on Arrow for a very sweet price that would help provide a non-dilutive way, in a sense, to provide some of the capex for any project costs. I think the royalty for Arrow, you could make a company out of that in itself, and I'd be curious to know
completely. I mean,
how they divide that pie up.
They're going to be like producing, I mean, 28 million pounds a year or something. I mean, it's a huge deposit. Absolutely. The question is what royalty company is going to be interested in that? Because that's far beyond the capabilities of UROY. So, I mean,
Well, I think that is one of those things where the energy sector at large could step in. That's where you start talking about oil and gas companies looking to diversify and things like that.
I mean, because that mine is going to cost $2 billion plus. They say they can do it for 1.3. I don't believe them. I'm sorry, I just don't. Okay, you're not building a mine in the middle of nowhere up in Saskatchewan, away from all the existing, resources in the Athabasca Basin. I'm sorry, no, I don't believe that for a moment. Particularly the fact that this is a management team that has proven time and time again that any kind of cost control is a skill that they do not possess.
But
So
you know what, Chapman? I guess the whole uranium movement, right? Part of the subtext is how much money a government's going to waste on other energy solutions that ultimately fail before they put that money into nuclear. And you would say, well, you could have just put this money into nuclear, and we could have saved all this money, and we could have been further ahead than we are now, right? That's kind of like the subtext of the commentary that we hear a lot.
well, yeah,
Similarly,
yeah.
Next Gen could say, when are you just going to spend all this money to build this huge, expensive mine in Saskatchewan before you start trying to, similarly within the nuclear industry, get your pounds from everywhere else? It's one of those things where the cost just creates a time decay before you're ultimately forced to make that final decision. So people say, Arrow will be a mine. I believe it will be a mine. Does that make it a good investment? No, because the half-life of that timing decision could be 25 years, and so it's, I have no doubt things will be. As an investor, it's about when.
Well, when was Cigar Lake initially discovered? In the early 90s? And that didn't become a mine until 2015 when they finally finished that one? So,
Yeah.
yeah.
So when you're talking about looking at Cameco going through its resistance levels and trying to make money, and all of us are talking about buying Cameco, etc., there's probably some poor sod who was looking at this deposit in the 90s thinking, oh yeah, this is going to be a great investment, right?
Oh,
And
it's been
30
25
years.
years.
Exactly.
All right, P, you've got your hand up. Netsum and I are going back, but we're not going to ignore you. So, what's up?
Hey, I'm just curious about whether you guys actually know whether any uranium stocks have a high percentage of insider ownership. Because I saw someone talk about it, and then I'm just starting to get curious.
I know global is about, 10 or 20% or something like that. But I'm not really sure off the top of my head. Denison is notable for having almost none. So that's interesting. But and Cameco is so big it doesn't matter. They're just an institution. So
I mean, with the bigger companies, a large insider ownership, could still be 5 to 10%. And then when you step down to, more expensive, say, exploration or development projects. I mean, for example, ISO Energy, I think, still is almost half owned by Next Gen, for example. But yeah, it's a good question actually, because I think I remember Azagra Uranium, which got acquired, used to have quite a high insider ownership. But it's a good question because you typically do see it actually in a lot of the PM sectors, but I haven't seen it in uranium as much.
doesn't Boss also have high insider ownership? Off the top of my head, I'm not sure though. I think it does.
Someone quote Deep Yellow. It's about 11%, something like that.
Oh well, it's such a shame that they don't have a good deposit though. Did I say that out loud? I'm sorry.
I have another poorly worded question. If no one else has anything pressing, can anybody speak on their bullish case for Kazakhstan or Kazatomprom, and why they're invested in there? Geographically, it doesn't look appealing to me at all. I'm not a fan of China. I'm not a fan of Russia. So I'm just curious where you guys see the value in a landlocked country right there.
Well, I think the strongest case for Kazatomprom has always come from Cuppy. Um, I I'm not invested in Kazatomprom directly. I've never have been, and I'm not really planning on it. If you take a look at comparisons, they are a bit better situated than on some financial metrics than Cameco. And they will also get. I mean, they've high graded their deposits so much that you are now seeing the price for per pound has gone up quite substantially. They're no longer going to be able to sell pounds for $35 anymore. I mean, they just can't do that. I mean, I think their latest quarter showed them up to like $18 a pound. And as you get out of the areas that are high graded, that you start have to going through more for essentially more sulfuric acid. This might be a good question for Mark Chalmers because he knows quite a bit about in situ recovery. So I think
were they exporting at a cheaper price compared to let's say Canada? Or
oh, sure. Yeah. I mean,
yeah.
well, yeah. I mean, their entire existence for the past 10 years has basically just been, selling cheap pounds. I mean, because they had their cost of recovery was $12 a pound, so they could afford to sell it for 35. I mean, it wasn't a problem, but that's gone away, and they can't do that anymore. So they still have a lot of pounds, absolutely, and they will still make a lot of money, and they are more than happy to sell those pounds at a higher price. I don't think, there may have been a little bit of potential for dumping there, but I think it was just a depressed uranium market, and they had such a low cost that they were able to do that. Now, as far as do you want to go get an IBRK account and go invest in, buy it directly on the London Exchange? I don't know. It's up to you, really. I think you can do the same thing and you'll have the same results with Cameco. And without the geopolitical risk. Well, okay, it is Canada. There is some geopolitical risk, but it's a different kind of geopolitical risk. So, I think you're seeing that. I mean, let me look at. I can go back over here and I can look at what they did, and they've been a little bit like sideways. I mean, they don't have. If you take a look at where they are now, like compared to where they were on from the Japan news, I mean they're in a much worse place than say a Cameco. So
I want to pose a hypothetical question, because that they do or have in the past supplied such a high percentage of the world's refined uranium, and if there was if it was beginning to become less attractive of a purchase from Kazakhstan, where do you see, what country, I guess you could say, where do you see some of that percentage being increased?
Well, I mean, if you were willing to basically, if the Australian government was willing to take up the slack, I think Australia could do that. There's plenty of deposits there that are amenable to in situ recovery. So, and Australia has a ton of uranium. So, they can do that if they're willing to. The thing is that keeps Australian uranium back is the fact that, that there's you can only have so many mines in South Australia, and, basically they don't particularly care to, be all that quick on proving any new uranium mines. But I would say if you had significant OECD pressure, you could find that uranium in Australia of a similar kind of quality here fairly quickly. So anyway, uranium cranium, you've got your hand up.
Okay, hey, thank you. I just had found some information on Twitter. It appears to be reputable about insider ownership, and I just wanted to share that. So I just retweeted it, the tweet that I found, but I can tell you the numbers that are seemingly accurate from the spreadsheet that the poster provided, that are from January of 2022. And so I'll just tell you the company name and also the insider ownership as reported. Appia Energy 29.1%, Bannerman 10, Boss 5, Canalaska 8, Consolidated Uranium 4, Deep Yellow 10.8, Encore 10, Fission 0.5, Forum 10, Global Atomic, I believe it says less than 15. It's a less than sign and a 15, so maybe 15 or less. GoviX 22, ISO Energy, it's a question mark. Laramide 11, Lotus 4, NextGen 5, PurePoint 4.5, Toro is a question mark. Valor is 20. Vimy is 3. And the last one is Western at essentially 16%. So I just wanted to share what I had found, try to inform folks.
Well, I think with the GoviX, we can put the whole thing that the whole idea that, oh yeah, insider ownership is a boon to the stock. Because it's like, wow. But again, they're working with kind of an older deposit that was found by the French a long time ago. They don't have DASA, so which was, as if you haven't heard me said, I think in the last space was a totally new deposit that the French just happened to not drill. So, and they found that. So that was whereas what GoviX has nearby, that's been known that that was there for quite a few decades, I believe. So yeah, they're defining it, of course, but yeah. So
hey Chapman, do you have any idea if high levels of insider ownership tend to have a correlation with, like, let's say, generous stock-based compensation? Maybe not just in uranium, but in general.
I mean, it wouldn't surprise me. That was the first thought in my head. It's like, oh yeah, well, if you have high insider ownership, well, maybe that's because the insiders are paying themselves in stock because they don't have the cash to pay themselves a cash salary. And the stock is then so worthless that they're not selling it either. So it's a hard not life for the CEO of a mining company. But beyond that, I have no idea. That's you might have some idea.
Actually, it's a really good point. The GoviX, just quickly on that GoviX insider shareholding. So Denison owns about, I think, like just over 10%.
Isn't there some rich dude
GoviX
also too?
There's the son of Robert Friedland, arguably the best, Govind Friedland, and there's also someone called Eric Stone. So yeah, I guess technically these are insiders. Are they management? Maybe some of them are on the BOD because they own so much. But it's a really good point actually on percentage of insider ownership, especially for these younger companies. It's really important to look at those initial listing prospectuses, because inevitably a lot of these companies do seed rounds where, just because someone owns 10% of the company doesn't mean that they spent the same amount that you did on their shares. In fact, that's more a rarity than a commonality. There are cases where you can buy 1 million shares for $9, I've seen, on a seed round for a stock that IPO'd at $1. And the other thing to be cautious of too is when looking at insider buying, is that sometimes you'll see, especially on down days, management like to show their support by spending about $3,000 to $5,000 on insider buys in the public market. If you just deducted this from whatever their salary is, which could be anywhere between $100,000 to $300,000 per year anyway, it doesn't mean anything. And so the best times
But
to
it
really
shows
judge
up in a filing sometimes.
it shows up in a filing, and the
And
best time
then
to really judge insider, the best time for me, in my opinion, to judge insider buying is when they participate in the concurrent financings. That I see as definitely aligning with shareholders, and you see it in the precious metals and the base metals space. Again, less so in the uranium space, but yeah, could just be a different style.
Well, all right, folks, I wanted to make this a short space, so I think we've about covered everything here. Basically, the topic du jour today is uranium stocks sold some, yo. And where we're gonna go from here is sort of up in the air. As you know, I think I still think the next couple of days are kind of critical. I think it may not matter as much as I think it does, but it's I was very genuinely surprised how much some of these stocks have sold down, and that's mostly because I spend my day looking at Cameco, for various reasons, and just as sort of the health of the sector as well. But I mean, I have all the stocks up, but at the end of the day, you just end up seeing how much they're down that day, and then you don't really see the multiple days down over time. I think there is look, my principal concern has been, and it still remains, that there isn't a lot of the kind of solid fundamental sentiment that would support this price action increase, because this really does, it moves the investment into a different kind of category where you have to be a lot more sure of it before you're coming in and you're buying at that basis level, because it gets to a point where your return on investment really has to become something on the basis not on a cash flow return, but how the market ends up valuing the stock itself, or valuing the enterprise. So but that's more of a reflection upon me and my own investment attitudes. So everyone is a bit different, of course. I think this has been an excellent run up. I think there's been a good opportunity for people who've got long-term holders to take some gains, particularly rotate out of positions that have been in the red for some time. And this has been, I think this is an opportunity. My best advice I think I could give to anyone that is, of course, not an investment. Well, whatever. I'm not telling you what to buy. I'm not in charge of your portfolio. But what I will say is, I think the market has not completely sold off uranium back to August lows or even July lows. And I think that has given everyone here, everyone in space, everyone invested in uranium, an opportunity to really evaluate their portfolio, consider what they believe will be the actual long-term winners, and discard the long-term losers. I think everyone should be really, really thinking about your portfolio, really thinking, what happens if we have a big jump up in the uranium price? Which of these stocks are really going to benefit? And you could, conclude that Kraken is the one stock that is going to benefit most from that. I mean, as much as it pains me to say that, the Kraken is not completely sold off yet. But again, it's there's different investment styles in this space, and I think there is no one proven or true way to invest in uranium or any investment sector and make a good return for yourself. So ultimately, it's just something you got to do. Uranium cranium, please.
Hey, I was just going to ask if we could start hearing about, maybe in the Substack or the new whatever, the new website or whatever. I don't know if you want to tell folks about what you're thinking about
Okay.
that. But
Pretty
hold on,
much.
let me just ask.
All right, cool.
I just have a research project that I'm interested in that comes to mind because I previously was interested in knowing who has cash, and kind of complementary to that, now I'm starting to think of who I would really love to see a sorting of the various companies in terms of what it would potentially cost them to build a mine and to get into production. I would love to see kind of like two different sorts of who has cash and what it would and what they say it would cost, that kind of. And basically, I'm just kind of interested now in trying to seeing who can get who's likely to get financed, who's on the margin of getting financed. I mean, we know from what you've told us which companies are fundamentally sound, are going to get back into production, are going to get into production, and that's all great. But I think that we are not really. It's now becoming common knowledge to know that, for example, NextGen has said that it's going to take them $1.5 billion to get into production. That's starting to become a number that people are familiar with, and in my own mind, I have like 16 million as what URG said would get them £1 million per year, and maybe 60 million for 2 million pounds per year. So we're starting to get some of these numbers, but there's massive difference between getting 60 million for 2 million pounds a year and 1.5 billion or more for 28 million pounds. It would be nice if people would start to be able to discuss things in terms of what the Sam hella would cost to get some of these things into production when that comes, because I think that's a big thing going forward. I think the cost of capital is so much more expensive. I think all the leverage is now with utilities to decide who they're going to contract, or I should say with the folks who are doing the financing, because it's no longer cheap capital days. And so I think that this whole question of financing these things, I find it fascinating, the discussions that are occurring around global atomics financings. Their discussions, one entity or one group of entities wants to do the mill, and another group or another entity wants to do the all actually works. And this financing thing is, I mean, it's make or break there. It's no longer just about who's running the show, what the insider ownership is, and how good the deposit, etc. It's like, is it even possible to finance these things? I don't know. It's just a research project, and again, if you're willing to share anything about what's happening.
Oh yeah.
Reserves.
So I'm still doing the Substack. Substack's gonna change. It's just exactly where it is. But I am looking into getting my own domain. So that's gonna be happening soon. And there's gonna be a website that's gonna be the same thing as Substack, but also a bit better, because it will have a bit more. It'll be easier to get data from me. Like I do like to share my my resources that I use for research, just so everybody can look it over themselves, and maybe I missed something. You never know. As well as all various different kinds of files and whatever else that you can decide. You can take that data and you can make something else out of it to your own benefit. So look for that in the next couple week or two. But yeah, we'll see where that goes. Even if I want to go down that road, we'll see. But I'm there's things that I just can't do on Substack that I want to change. So, yeah, stay tuned, I guess. But it is happening, so that's good. But
I've already purchased ChapmanScarborough.com, UraniumCPA.com,
oh,
and
great! Yeah,
SectionCPA.com.
thank you so much, Robbie.
So I will sell them to you.
Okay, great. Here's a penny. That's how much my name is worth. So, I will give you 1 share of Silex. I'm just kidding. No, yeah, we'll see where all that goes. But yeah, this domain names are fun. But yeah, so Liberty's coming back up, I guess, for some final closing thoughts, or if not. Any closing thoughts, Liberty, or anybody else that's up on the speaker's dais? And then if not, we'll...
I can tell you what Liberty is going to say. He's going to say, we pump through winter and we dump next year. All right, guys, signing off.
Oh, yeah.
I was going to say, yeah, go ahead.
No, I think that, well, I think whatever Robin said is true, but yeah, go on.
I was just going to say it's kind of funny because I registered the domains years ago, like 8 years ago. I got Liberty Offensive and the Liberty Offensive, right? And I've spent like $60 on those names, and they're worth like $4,000 now. So you got to go get those names.
Yeah,
I'm not joking.
Yeah. Well, there's a lot of different domain names actually, and we haven't quite decided. I'm sorry, I'm using royal plurals. Me and my advisory team, as you know, at the Proven Reserves domain name expansion and acquisition desk, are still trying to figure that out. So yeah,
I left a message at the Silver Desk, and nobody's called me back.
I know. Okay, look, I don't know a whole heck of a lot about silver, other than the fact that I can invest in it, and it seems to, not totally, go cattywampus on me. The only good news I find about silver right now is that it's not going up, it's not going down, it's just staying exactly where it's at, and that's a good thing for now. I want it to go back up, but at least I don't want it to sell. So that's good. But yeah, we are starting. There is going to be the Silver Desk soon. As I'm kind of branching out here. I'm going to be at the New Orleans Investment Conference in October, and that's kind of a primarily gold and silver space. Strangely enough, Uranium Energy Corp and UROY is going to be there as well. I think Liberty's also going to be there. We're trying to talk Austin into showing up too. Jabroni's coming, I think. So we're going to have a whole bunch of people there. And again, it's primarily gold and silver. But if there is a recession, gold and silver typically just goes through the moon. So it's kind of a space. So yeah. So it's sort of a space that, everyone might want to start considering allocating to. I'm not saying that it's not a squeeze. There isn't a squeeze. I wish I'm tired of the squeezes. I've been squeezed and squeezed to death. It's sort of one of those things. Okay, I will accept the word parabolic if you will not use the word squeeze, but you only get one. Okay, you can have squeeze or you can have parabolic. Okay, that you cannot use both market swear words, all right, for over bullishness. But yeah, otherwise you get sent to, bullish timeout, and you have to hang out with some bears who tell you you're wrong. Like, I'm going to send you to a space, and you're going to have to sit there, and you're going to have to listen to P and Uranium Cranium and whatever bear else I can find, and you're just going to have to listen to them for like an hour. And you're gonna and they're gonna be telling you how they're all cash and how you're about to just lose everything, and that's I have decided that is an appropriate punishment for using two bullish swear words, which is once again parabolic or squeeze. Or short. Actually, short counts too. Short squeeze is a double swear word. I mean that's anyway. I've said it too much, but Austin, you were about to say something.
Last thing on that, I've been thinking about it more before I jokingly said it. I actually give this a pretty good shot tomorrow, and it's gonna Babe Ruth this thing, call the shot. PPI comes in surprisingly low tomorrow. People buy the fucking dip. We squeeze into OPEX, probably very bad from there. That's my guess. I'm doing nothing with that information, but just gonna call that shot.
Well,
He said squeeze.
Yeah, well, no, but he didn't say short squeeze, and he didn't say short squeeze with a parabolic rise. Okay, you get one bullish swear word, right? you cannot use more than one bullish word. You can't use more than one bearish word either. Okay, you've got to make your point with one sentiment swear word. So.
You won't hear squeeze much longer because you can't squeeze what's already been squeezed.
I happen to agree with Austin. I did not sell today. I actually bought the dip a little bit. I do think that we will have I'm not expecting, a huge day. Otherwise, I would have just bought, T triple Q. But I am expecting at least 1 or 2%. I think you'll see a little bit of a relief rally. I think everyone just they'll have a deep breath and they're gonna come home and like oh my god, what did I sell? Oh god, why did I get rid of that? I love that asset. And they're gonna have seller's regret, and there's gonna be a little bit of buying back in tomorrow. That can happen. I think. There's I think everyone's had that feeling in the panic a little bit sometimes where it's like, oh god, it's just like I have a page on my Fidelity where it's like everything is just like the orders are literally like ready to go, just by the buy, where I can just like click a button and it's just all gone, because apparently in Fidelity Active Trader Pro there isn't some hotkey for close all positions, probably a good thing, but. So I have like a page that's literally just set up for all my securities, and it's just like it's the market order is set up, and it's just like one after the other. I can just click, and it's all gone. So that's the way I had to figure it out, because I was like, oh god, I don't know, I didn't know what exactly was going to happen. I set that up. I set that page up like a couple days ago because I was like, oh boy, I don't know what's going to happen here. Like the market could just go just absolutely crazy, but. We held pretty strong here. I'm pretty happy with my portfolio. I'm happy that I'm not in the total, basket case, on that side of the market. Obviously, saw some other things that sold down, but, Apple was down like almost like almost 6% today is what Apple was down. And that's like hundreds of billions of dollars of value just poof. Gone. It's on a computer screen. It's not there anymore. So, yeah, it's, I don't know. There is kind of a count your blessings mentality here a little bit. And just remember just to not be greedy. But yeah, anyway, I'm happy this space was short. I just wanted this space to be short spaces, and we are exactly at 2 hours here. So with that, I will see y'all next Tuesday. I'm sorry this spaces thing, like the little notification for it came up at a kind of a late time. We also started late today because I wanted to get everybody a chance to put their affairs in order on the ASX Open as they saw fit, instead of having to come and join a space and see what we were doing. So, or at very least that's what I was doing on the ASX, and this was more about me than y'all. I wanted to have some time to put my affairs in order on the ASX before we started the space. And I did, and I'm happy the way it turned out. So, but with that, we will see y'all next Tuesday. I will be around, of course. Anybody, feel free to send me a message if you have any questions about something. I'm actually kind of available, and I usually try to answer those. So, anyway, see y'all around. Good luck trading tomorrow. Red. What now?
Nothing.
Okay, fine. All right. I will see you later. All right. Good night, everyone.
See ya.